Hello friends, this is Raj Sastry from Raj Option Trading. Today is February 10, 2022. Let's talk about Editas. Editas is a biotechnology company. They're into gene editing and delivery technology. So let's look at this great company and see if it's worth buying here. So with that, let's jump in here. We will talk about company overview and look at competitive landscape, review a few charts, do a deep dive on Editas, and look at the financial summary, rank few stocks in the same category, and do a final verdict. Is it good to buy Editas or not? So with that, jump in. So look from a leadership perspective, we got James. He's the CEO of the company, and 0% approve. So we got a 2.7 rating for the CEO here. So from a CEO perspective, I say CEO does not check out here because rating is 0%. It might mean, as you can see here, not too many people rated. So too early to say, but at this time, I don't have anything to say about the leadership here. So let's jump in and look at the numbers. All right, so from a platform perspective, if you see here, it's a highly differentiated gene editing company here, and they got some great technology. And they use proprietary CRISPR enzymes, and they got multiplex gene editing and a great platform. And they're into various rare diseases delivered by these multiple delivery solutions they have. And they got advanced bioinformatics. I think overall companies are trying to do the right thing, but they're struggling a little bit because it's very difficult area to be in gene editing and make progress continuously. Let's look at the pipeline here. From a pipeline perspective, this company has got great pipeline. Look, they're also partnering with other companies here, with the Blue Rock, and we got Bristol Myers and few other companies. And look, in case of ocular in vision, they got various things going on in the vision. And primary candidate in the vision is Edit 101 here. They are working through this as we speak. And look, it's in the clinical stage here. I think it's a good one here. And they got various other areas they're working on. They got Edit 103, 102, and look, they got various other neurological diseases. They're working through them. It's very early stage when it comes to some of these indications here. That's why patience is required in investing in Editas. And they're also into vivo, and they're working through sickle cell and transfusion. So they're also in the clinical stage right now. And they got oncology here. Think cancer. They're working through some cancer indications here with solid state and few other indications. It's also in the early stage. So what you see here is a early stage company working through multiple indications here, and in some cases they're dosing the candidates, especially in case of vision. They're dosing and taking care of early child inherited blindness and cure the disease. So with that, I say, if you have some patience, you could buy the beaten down stock. These guys are going to come out with flying colors. It's not for your retirement portfolio, but it's a great play to invest in a very beaten down stock here. You will get a nice bounce back, as some of these indications will do great in upcoming year. So with that, let's jump in. So from a stock perspective, look, it's Editas Medicine, and stock price is very low here, just $18 as you can see here, and market cap is $18 billion. And they focus on developing transformative genomic medicines to treat rare diseases. It's a very hard area to be in. That's why this company is not consistent when it comes to performance. Look at the performance here. They did great in 2020. Look at the uptick here. This is what happens when one of the indications does very well. Company stock skyrockets, and then promptly it came back here, went up, came back. Right now we are really down here. This is a great time to buy Editas. If you have a little bit long-term vision, you can see this skyrocket nicely to 40, 50 levels easily in 6 to 8 months. I think it's a great one to buy. This is clearly not for your retirement portfolio because this stock is very rocky. the time to buy this stock is somewhere now, given it's beaten down big time. And right now, from a sentiment perspective, we got a very bearish sentiment here. So that's why, when the sentiment is bearish, company with a great pipeline, that's when you invest and go from there. And look, they fired their chief medical officer, and we don't know the reason. They're not disclosing the reason. It could be for a right reason, but we don't know. It happened suddenly, and Motley Fool is thinking it's a great company at this time. This can skyrocket. I tend to agree with them. They got a lot of solid pipeline here, and they can do very well. And they're focusing on gene editing eye diseases, especially for young children with inherited eye disease in the early age. They're developing a cure for that. So with that, I say, go buy some Editas here. It's beaten down big time, has a nice bounce back opportunity. And let's look at analyst recommendation here. From an analyst perspective, consensus, it's a buy rating right now. And look, we got analyst rating with the 12 analysts here, and we got a buy rating here. We got strong buy from 5, and hold from 5 also, and strong sell for 2. So it's right now it's a good rating here, a buy rating. So I say go buy some Editas, especially because of great pipeline, and stock is beaten down. And look, there is a target price right now of 52, and current price is 18. That tells you you'll get a nice upside surprise of 182%, in 12 months. I think that's a great surprise here. And from a technical perspective, look, right now it's in a sell, which is bearish. So that's when we go and buy this stock here and hold it for a while. All right, let's look at competitive landscape. From a competitive landscape perspective, look, we got a few names here. Let's move this a little bit here so we can see that clearly. There you go. So from a competitive landscape perspective, we got a lot of competitors in the gene editing space here. And look, we got PACB here on the top, and PACB, as you can scan through. Let's go back here. So we got PACB, Pacific Bioscience at the top. Look at this company here, and they got net margin negative right now. Companies has nice sales, $122 million in sales, as you can see here. Stock is clobbered, 36% RSI. That tells you stock is clobbered. You can look at what it's doing near term. It's trying to turn around right now. At this time, I say go buy some Pack B here. Pacific Bioscience is rebounding nicely. Nice 5-year performance here, 144%. Target price is 35. Current price is 11. Look at the upside here. That's a great upside here. And from a revenue growth perspective for next year, they got nice revenue growth. Earnings per share is negative, given company is not making money. And they do have some money. That's why Altman Z score is positive here. And they got overall score of 22. Piotrowski F score is 3, which says it's okay, not great. And we got Bluebird. Bluebird used to be a high flyer a while ago, but it's coming down big time, as you can see here. If you're a controversial or a contrarian, you could buy some Bluebird at these levels here. It's a bargain. Somebody will go buy Bluebird and stock will skyrocket. I think it's at this price, it's a good bargain. I say don't buy too much, but buy slowly. Stock has been going down constantly. Now it's trying to turn around, as you can see here. And then we got stock that we are going to talk about, Editas. Look, it's a great company, but stock is not responding well. Stock is down big time. Now it's slowly increasing in 1 day, 5 day, 10 day. I say go buy some Editas. Look, RSI is very low here. And at this time here, from a future expectation, look, they got a revenue increase for next year. There's a nice future projection here. Company has got a lot of money here. Look at the Altman Z score, 3.8, solid money here. And they got nice overall score of 45. So I say go buy some Editas. And then you got DTIL. I like this one also. It's a very low price stock, as you can see here. It's got nice overall score of 64. If you have some patience, you can buy this one also. It's been turning around, as you can see here. All the gene editing stocks, they got clobbered and now they're turning around. And then you got Moderna. Moderna used to be a high flyer with the COVID-19 vaccine, came back to earth. As you can see here, still very good rating here, 94 overall rating. And look, they got nice 267 as the target price. Current price is 164. That's a nice about $100 upsize from current price here. And nice both earnings per share as well as revenue growth for the future. Good amount of money, no issue, and their books are also solid with the Piotrowski F score at 6 here. And then you got a few more as you can scan through here. We will not talk through everything in detail. You can look through. I like many of these names, beaten down big time. And look at the 5 year. Many of these stocks have done great in 5 year, and now they are struggling in the near term and trying to rebound in 1 day, 5 day. That's when I jump in and buy some and hold it for a long time. So with that, let's jump in and look at few charts. From a chart perspective, look, we got PACB at the top here. PACB has been coming down, down, down. Right now, it's trying to go higher. Earning is coming up soon to 15, as you can see here. And stock is trying to rebound nicely and try to go higher. So at these levels, you could buy PACB and you can be in for a nice surprise as they announce earnings. Look, we get earnings. When the stock came down before earning, stock promptly went higher after the earning. Same thing happened here. Stock went higher. This one, stock came down after earning went higher. We can expect same thing. Some of these companies have got repeatable pattern. If you buy here, you could expect a nice uptick here after the earning. And then you got Editas, the company that we are talking about. Stock is getting clobbered. Look, big time, down, down again. Now it's stabilizing. Earning is coming up 221. And I say, you can buy the stock before the earnings, and this can also go high after the earning. And then you got DTIL, beaten down stock, just $5 stock, as you can see here. You could buy this one. Look, big time down, trying to rebound now. I think this will also do well. And then you got Fate Therapeutics, one of my favorite stock here. Look, stock is beaten down big time and trying to go higher. All these gene editing stocks, they have come down so much. You could expect a nice bounce from these levels here. All right, let's look at a few more here. And look, we got SGMO. This used to be one of the great stock a while ago. Now it's down to earth, below 200-day moving average. Stock is rebounding now. You could also buy this one. This will also do well. And then got Arrowhead. This used to be Wall Street darling a while ago. Stock got clobbered, as you can see here. Now it's turning around. This is also a good one to buy and hold for a while. And then got NTLA. It's one of the better stocks. Stock price is 97. Stock is getting clobbered, trying to go higher. Look at on the balance volume, pretty steady here. That tells you all the big money managers, they are buying this company, taking advantage of low price here. And then you got CRSP. It's also one of my favorite here. $65 stock. Stock is getting clobbered, as you can see here. And last couple of earnings, stock did not respond well. Earning stock went higher but got clobbered again. Earning stock came down. I think at this time you can slowly buy. Most of this negative news is already baked into the stock price, and this can also go higher nicely. All right, with that, let's look at Editas Medicine and do a deep dive. From a deep dive perspective, look, stock price is at $18, and stock, this was IPO back in 2016, and look, beta is 1.95. That tells you it's a high beta stock. If S&P 500 moves by 1%, this will move by about 2% or 1.95%. That's the correlation here. This can go much, much higher than S&P 500 or much lower. Look, current stock price is $18, and the target target is 47. That's a nice upside from current stock price here. Great trading volume here. Look at the short ratio here, 16% short ratio. That tells you this stock can squeeze these shorts soon after the earnings. And from a sales perspective, look, sales growth is negative right now, and even year over year, sales growth is negative. 5-year sales growth is positive here. That's why this is not one of those predictable stocks that keeps going higher. This is one of those stocks. It will go and do nicely when there is a surprise in the drugs and dosing, and otherwise it will stay low. If there is some bad news, stock goes down. This is one of those rocky stocks. You got to know when to buy this and hold it right now with a good time. Company is not making money. Look, earnings per share is negative, and look at the net margin here. Um, from a net margin perspective, there is company not making money right now. EBITDA margin is big time negative right now. And for the future perspective, look, EPS growth for this year and next year. This year is positive, next year is negative. Company is not making money, and sales growth is positive. Analysts are expecting nice sales growth for next year. That can help, all these indication they're working on, especially the blindness in the childhood. It can increase the sales growth as we go forward. And then as you look through here from a financial perspective, cash flow negative company. Right now they're not turning into positive cash flow. They got a lot of money. Look, $558 million of cash, very low debt. I think overall, I think financial position wise, it's okay here. Performance is really horrible. Look at 1 month, 3 month performance, and 6 month, 1 year, all negative here. That's when we go and buy some stock here, hold it for a long time. And look, from a growth grade perspective, Morningstar gives them a A grade here. It's a nice growth company. Industry valuation, very low valuation here, just 2 here. From a valuation perspective, that's a good one. Profitability is not there right now. That's why it's low profitability. They got a lot of money. Altman Z score is 3.8. Company is not going to go bankrupt. Nice industry growth grade here, number 4. Lower the better. And profit rank is 4, which is okay, not too bad. So with that, let's jump in and look at a few more details. Look, from an earnings per share perspective, company turning a corner. It's trying to trend higher. This is annual, as you can see here. And sales perspective, it's doing a nice uptick here. Look, it's a nice overall progression in annual sales. That's also good. One thing I don't like is the shares outstanding keeps going higher. That tells you company diluting the share count, which is not great. That's one of the reasons stock is not moving well. In addition to the drug news, which sometimes is not great. And from a quarterly revenue perspective, this is where the bumpiness comes in. Look, sometimes company does well. Look, they did well, 63 million here, but then they kept sleeping here. They did not do too well. So this will be reflected in stock price. When they do nicely like this, stock price shoots up, and when they do like this, zero, stock price comes down to earth. That's when you buy this stock and hold it for a while. Company is spending money on R&D, as you can see here. They spent a lot of money in R&D, but now it's consistent around $30 million type run rate here, which is pretty good. Quarterly income is trending in the right direction. Look, it's trending in the right direction. Even though it's negative, it's trending in the right direction. I like that one here. So that's why, companies trying to grow top line, as you can see here, and also focus on the bottom line from an earnings perspective, and also from a net income perspective. It's trending in the right direction. One thing I would caution is I want them to reduce the share outstanding, so that way there is not too much dilution. So with that, let's jump in here and look at the quarterly performance. From a quarterly performance perspective, there is no better way to put it. Companies losing out from a price perspective, performance perspective since last 2 quarters. Look here, price came down from 56 to 41 to 18. That's a huge downturn in the price here. That tells you companies struggling here. But they're making improvement. They got a lot of pipeline. And one more thing to note is, look at the sales quarter over quarter change. They are surprising Wall Street negatively with their negative sales growth. That's not good news here. And they're also surprising Wall Street with the negative earnings per share. Here, that's why stock is not responding well. It's going down. They have a lot of cash, as you can see here. They're slowly, they got a lot of cash. You don't need to worry here. Very low debt. They're also reducing the debt, as you can see here. And free cash flow is negative, not great. I think they have to work on this one here. And net margin is negative right now, and all the margins are negative. From a price to sales perspective, it's a little expensive, but now it's coming down nicely given stock price is just $18. So with that, from a numbers perspective, there is nothing to brag about here. Company is not doing great, but lot of future pipeline candidates here. That's why this is one you buy, not looking at the numbers, but by looking at the company's pipeline. All right. So from a performance perspective, look from a yearly performance perspective, we got 2022 down 30% here, 2021 down 62. The moment this happens here, that's the new jump in and buy the stock and hold it for a while. Look here, in 2021 stock opened up at $71 and stock closed at 26. That's a huge performance drain here for the company. So when this happens, like 62%, then there is a nice bounce back, following year. So I expect this year to be good for Editas. And from a monthly performance perspective, look, stock has been clobbered in January and February, and they've done nicely past. Whenever they get clobbered like this, they always come back with a vengeance. That's why I think at this time, you could slowly buy and hold this company. You will have a nice surprise. All right, from a stock chart perspective, look, this stock is one of those with a lot of peaks and valleys. Look, there's a nice peak here, valley, nice, great peak here, could be a short squeeze, came down to earth, and it came big time down here. And from here, I expect a nice rally uptick here. And look, there's a nice base here. I say right now we're in a nice support level here. From here, stock can consolidate and go higher. So that's why it's good to buy here. It's a 5-year weekly chart, as you can see here. And now let's look at a 1-year chart. Look, from a 1-year chart perspective, stock went up, came down to earth, as you can see here, consolidated nicely, more consolidation. Now it's trying to go higher. Look, the blue line wants to go higher, red line wants to go lower. Soon you can see a bullish crossover where blue line goes higher above the red line. And from a on the balance volume perspective, look, it's stabilizing now. I can see this going higher. Check-in money flow went higher, tells you smart money bought the stock. Now they're thinking whether to buy more or not. So technical perspective is trending in the right direction. That's why I say go buy some Editas and hold it for a while. All right, from an option perspective, this look, stock price is $18, as you can see here. 52-week high is 73. That's a nice room to grow for this company here. And look, around the current strike price, around 17.5 here, we got 37 as open interest in the call side of the house. And look at $40 strike price here, which is very high compared to current price. We got nice open interest here, 1,200 contracts. That tells you in the option market, folks are betting this stock will go higher. Look, nice option, call option, open interest here. Compared to put here, on the put side, we do have some open interest, but not as high as the call side. That's why in the option market, folks are buying this nicely, expecting a nice surprise on the upside. All right, now let's look at the option statistics here. Look, we got total 1,400 call contracts traded, whereas put contract is 779. That makes the put call ratio much less than 1 here. That's the bullish indication. So that's why I say go buy some Editas here. You will do nicely if you hold it for a while. So with that, let's compare few stocks and see what's going on here. We'll compare PACB and Editas, DTIL, and so on and so forth. So with that, let's jump in here. Look, from a comparison perspective, we got PACB here, and PACB, as we scan through here, all these stocks have got nice rating here, either buy or a strong buy. We got strong buy for both DTIL and Fate, as well as BPMC, Blueprint here, and NTLA. I think those are great strong buys. I agree. And from a target price perspective, all these stocks have got a nice high target price compared to current price. All these gene editing stocks have came down to earth. That's why it's the right time to buy. Look at this year, 52-week high. They are very down to earth from 52-week high. That's another reason you could buy, because it's completely sold off. The sector is out of favor right now. That's when you build a nice position. And many of these stocks, as you look through here, net margin perspective, not a pretty scene here, with the exception of CRISPR, which makes some money here, net margin positive, and Moderna with the nice net margin. Other companies are not making money yet. They're losing money. That's one of the reasons Wall Street does not like them. And as you scan through here from a valuation perspective, most of these companies have got little higher valuation. But look, we got few companies like DTIL, low valuation, Sangmo again, low valuation, and CRISPR is a great one to buy, low valuation here, and Moderna, same story, low valuation. And from a performance perspective, look at 1 year and 5 year. Some companies have done great long term here. Even PACB, look, nice performance in 5 years. Editas is 3.5%, just barely making it break even here. And we got Fate, great performance. Look, I like it here. And Arrowhead, nice performance long term. That's when you buy some of these names. They have done great long term and they're struggling right now. So that's when you slowly buy them and go from there. And look from a financial positioning perspective, look at the Altman Z score that tells you financials. PACB is struggling. It's okay. Early stage biotech, no big deal. But Editas has got nice Altman Z score. Company is very stable here. And same story with Fate. It has a lot of money here. And same story with Arrowhead as well as NTLA, CRISPR as well as BPMC, and other two, ALNY and Moderna. And now let's look at the books. Anytime you see score above 5 or 6, that tells you books are strong here. With the DTIL and Fate, they got solid books here. Their financial position is getting improved. And CRISPR, you could buy this company, great books. They've done consistently well in their book of business and financials. You could buy that one. And Moderna's books are also solid here with the grade 6 grade here. And from a Morningstar perspective, look, this is the Morningstar rating here, and many of these companies have got great rating. And look, Editas has got A rating for growth here, and many of these companies like Editas, DTIL, and even Fate, they all have got A grade here, which is great here. And now let's look at overall rating here. From an overall rating perspective, I say number one spot goes to Moderna. Moderna is doing very well, very high score, 94. Number two spot goes to CRISPR. They're also doing nicely. And number three spot goes to, it's right here. It's a tie between Arrowhead as well as Fate Therapeutics. And then we got other names here like ALNY as well as NTLA. And then comes Sangmo with the 54 here, 48 here, and then you got the Arrow, Editas. So I said this time Editas is a good one, but if you're a gene editing enthusiast like me, you could buy many of these great names at these depressed price levels here. And I say start with the higher overall score here, like Moderna and like CRISPR and Arrowhead. And I think the higher the score, better you could go. But Editas is a great one to buy here, given stock is depressed and great pipeline. So with that, let's jump in here, look at what should I do with my Editas. So right now, Editas is beaten down big time. Companies targeting a range of serious rare diseases with the investigational treatments, and they're working on this gene editing technology called Sleek. So that's why this can be next breakthrough in treating the next generation. With the next generation cell therapeutics for cancer and other serious diseases. And they got this highly differentiated gene editing and delivery technology. I think they are really building their muscle right now. They don't have too much to show for it at this time, but it will come pretty soon. And we talked about Edit 101 here, combating inherited blindness in childhood. So there is some positive indication here. I think this can turn the corner for the company. There is excellent feedback from the medical and scientific and patient communities. and they just fired the chief medical officer, Lisa Michaels. We don't know what the reason, but there may be a good reason here. One of the reasons stock came down is because there is no reason they fired chief medical officer. So I recommend buying on the pullbacks. This stock is not for your retirement portfolio, but for you to buy when it's down and hold it for a couple months, and this will go up very nicely and you can take the profit off the table. Many of these early biotech stocks have got peaks and valleys. You buy when they're down like this and then hold for a couple months, and then you can take some profit. So with that, thank you very much. Happy investing and trading. Please subscribe.